All right, guys, what's going on? This is Carlos, CEO of GAR Capital. Thanks for joining our market recap video today. We do this every week around the evening time on Fridays, recapping the session. It's not a live video, it's a recorded video. So we're going to go over our week, our month, our quarter, our whole year. Oh, well, the half of the year. You made it through halftime, 6 months in. Welcome aboard. Dow Jones closed up 285 points, NASDAQ up 1.45%. We've been talking about this in the morning note, that inverse head and shoulders, same thing with S&P. We caught it, well done team. S&P 500, 4450, up 1.23%. VIX closed up 0.37%, 13.59. The dollar came down to 0.41% at 102.92. I went ahead and put a couple of things up on Twitter if you guys are interested. Let's see if I can get this going. Here is the halftime report, I guess. Here's the year. The big leader in the clubhouse is the NASDAQ. NASDAQ is up 38.74%. So if we did the same thing for the next half of 2023, the NASDAQ would be up 92.83%. I don't think we get there, but pretty nice. S&P next in line, 15.85%. Then the small caps, IWM 8%, and the Dow up 3.68%. Obviously, the tech has been in focus, tech stocks. The NASDAQ scores 39% in 6 months, the best first half ever, like ever. Let's see here. S&P rises 16% in 6 months. That's the best first half since 2019. You can take that with a grain of salt. 2019, right after that, we had COVID in 2020. So again, there is some history there, but pretty great numbers, obviously, all around. Yeah, great stuff. Okay, let's go ahead and first we're going to go ahead and go over our numbers for the month and everything like that. We'll go to the Discord. And again, I posted it all here. If you guys are interested, if you haven't joined already, the live market blog, go to our website, www.gar.capital. Sign up for the free plan. That is the free market blog. So you can join us if you like. Give us a test run, see how you like what we talk about. And if you do, you could sign up. And again, if you want to just sign up for the premium signals, masterclass, basic signals, future signals, or Forex, again, you'll still have access to the market blog. Again, we'd love to have you on board. So again, this was sent out. Let's go ahead and minimize this. We don't need it. We're going to go to our trusty Microsoft Excel. So let's start with the beginning. We're going to start with just the beginning, which is the week. We're going to update this. We're 6 out of 9 this week. So we're going to go over each one rather quickly. Let me go ahead and get the percentage calculator. 6 out of 9 isn't my best week, isn't our best week. That means we got to get better. And I know exactly what we did wrong before I even did this video. Very important to know exactly what we did wrong so we can fix it. That's the key. All right, so let's go over the numbers here today, at least for the week. Amazon and Facebook were carryovers from last week, and we bought them because they were breaking out, bought some time on a Friday, the 23rd of June. Amazon hit in the money, hit 20% four times, hit 20% on that Friday, and we closed in the money. We had the 130 calls. Well, it didn't close in the money. It closed 129.38, 98, pretty close. Metaverse, same deal. Broke out, chopped around. We got as high as 25%, literally that day, and we did not close. That's my fault. Those are 2 winners we could have taken, and we changed that today by not opening anything new. And trust me, there was a lot of setups that we could have traded. But again, we know what our mistakes are. It's holding the stuff over the weekend into next week. Monday and Tuesday get choppy, so let's start fresh on Monday. Pretty sure on Monday might be a little choppy. We're ahead of a holiday weekend. Again, you have Federburn on Monday. You have no signals, no market on Tuesday. It's a holiday. So again, it's best to sit on our hands and see what the next opportunity is. Tesla worked out for us. We did puts. Microsoft, we did puts as well. That was a same-day trade. We got it same day. We learned our lesson. 46 and 40 right off the rip. Delta and Marathon the next day on the 27th. We closed them as well. Mara hit in the money. Delta hit deep in the money. Hit as high as 350%. Well done. I closed for 100. So again, 50% is the signal. I don't go by what I close. I go by what the signal is. Apple, 34%. We closed that rather early. Again, the 190 calls. Again, you don't know when reversals come. Damned if you do, damned if you don't. Look where it went. In the money as high as 413%. I held that. I got 200% on Apple. I put the screenshot on Discord as well. But again, wherever you guys close, that's what it is. But here's what I got: 196% on these Apple 190 calls, and I closed really early. I closed right at the open, 9:30. If I would have held, I would have got 413% on a full position. Would have, could have, should have, but I didn't, and that's okay. Tesla 260 calls, I held those as well. I got 53%, and again, those things hit in the money today, I believe. Let me make sure if it did or didn't. Did it hit in the money? It did. 264.48, pretty close, pretty close. So it didn't hit in the money. I'm gonna have to adjust that. Close to in the money. Close to in the money. Let me put close to in the money. Well, actually, no, it was in the money. Sorry, we had the 260 calls. My apologies. We're deep in the money, so we caught that. I was thinking 265. That was a target I had on the morning note. If you played Tesla today, based on the analysis we did today, thinking that we were going to fill that gap, we were pretty close. If you had those 265s for today, first thing in the morning, you banked this morning because you went from 258 to 264. That's enough to get you probably 50, 60% if you did same day. I don't like same day, but if you did next week, you probably banked on those two, so well done. DraftKings will definitely stay with me. It's kind of like Boeing when a couple of weeks ago where it just kept hitting. And DraftKings this week was just tough because we had the breakout, exactly what we wanted. We filled it on Thursday. Here's what we got to 30%. And I did not close. And we fell back down in this channel. And guess what? We got in the money right at 445. Great. Does that mean that we cannot trade DraftKings in the future? Absolutely not. Of course we can, because we're starting to get a move. The problem is we just ran out of time. And that happens. That just happens. That's just like the waves crashing in the beach. Back and forth, back and forth. So all good there. I mean, we just didn't catch it. It was 30%. I should have taken it. No excuses there. The only thing that I made a mistake on was putting out the chart so quickly instead of thinking about the trade. Literally, while I was setting up the chart, explaining it to Masterclass and premium members, it got to 25%. I should have dropped that and gone straight to the actual trade. But that's on me. That's something I will clean up. So again, not the best. Pretty flat if you traded all of these for today. Not this week, not including runners. So that's where we are in terms of the market this week. Let's go to June. June wasn't the best, and the reason was these three. If we take away these three, we're 15 out of 20. So if we take away let's say we made DraftKings, and well, actually we got all these. Let's say we closed when we were supposed to. That's 18 out of 23. We're at 78% because of three trades that we could have closed. And look at the month. Other than Disney, which we did puts and it was breaking down, everything hit target. Everything was green. Everything was either in the money or hit green. And we just have to work on the exits. It gets a little choppy. It gets a little bit of issues here and there about when do we get out? Do we want to be greedy? Do we want to be fearful? Do we want to make sure that we have our risks in check? It just happens. And again, like the tide, that's what happens. So if we just add everything that we did correctly and we got out exactly when we were, right when we had the green and not thinking about it, that's 1, 2, 3, 4, 5, 6, 7. 7 other than Disney. That's 15 plus 7. Let's go ahead and add that up. I believe it's 22, but again, who knows? I have to check. 22 out of, again, remember, these are ones that hit green. 22 out of 23, if we would just close 30%, let's say 25% minimum. If we would have just taken 20% on Boeing, that was a headline. If we would have taken these at 20%, we are 22 out of 23. That's a 96% hit rate. I'm going to write this down for my notes because this is like my trading journal. If we closed plus 20%, we are 22 out of 23 this month. So do we change our direction? Or do we just have to be a little less greedy? Well, it depends because it goes back and forth. Again, every trade is different. Every market is different. Hell, every day is different. So we just have to do our best. The 40% rule is not gospel. There's times where you could see here I closed for 36%, 11% on Caterpillar, and that thing hit 155%. Look at this. I played it safe. I said 11% guys, close here, and what happens ahead of CPI? We soar and get to 155%. What can you do? How about Tesla, 220 calls? Let's close here for 20%, guys. Let's be safe. It goes as high as 1,263%. So it's one of those things, damned if you do, damned if you don't. You really can't blame anything. You just have to be better. That's it. This is your scoreboard. That's all you can go by. So Again, not the best month. Again, it just beats me up that 22 out of 23 of these option trades hit 20%, and we could have gotten them. That's money out of the window, but we're going to make it back. We have July coming, and we're going to make sure to go hard, and we're going to learn these lessons moving forward. And we're going to make sure when we see 20%, we're going to let people know, hey guys, 20%. Let's not let this go red. If it goes red, we close. Maybe that's one way we could do it. But again, we may miss out on some gains. So it's kind of like, how do you see the market? Do you see it as speculation? Hey, I just want to make as much as I can, or do I want to protect myself? It's kind of that fight back and forth. If we go to the quarter, here we go. Quarter 2 of 2023, everything is added 75%. Now let's look at the quarter. 30%. We got out of this FOMC warning, 2% pre-market, that fell. So again, 1. Gave option to close minus 43% ahead of earnings. That was Disney. Gave the option to close minus 7% ahead of earnings. Again, we didn't close, but we could have made some back. 20%, and then it soared the next session. Caterpillar puts, again, 20%, 30%. You're starting to notice we're that close to getting almost everything. 35% on June 1st. We saw that. Again, so June was the almost. May was really strong. April was really strong. Couple of reversals. Again, those are very frustrating, but that's just the name of the game, and you just have to get better. 45 out of 60, that's 75%. If we add the numbers are the stocks that, again, that actually hit. So again, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. So we get 45 plus 9 equals 54. If we do 54 out of 60, we are at 90%. So imagine this. Let's put a note here. 11 of these trades hit 20% profit. If we closed, that's 54 out of 60. That's 90% hit rate. So why is this important? Why do we care? Well, Carlos, I don't care about what you could have done. And I don't blame you. I don't blame you. Because, we don't make money on could have. We make money on doing it. So why does this matter? Why does this matter? Because now we can learn the lessons moving forward. If we're not sure, if the time is too close, maybe it's a Thursday, maybe the market's getting a little shaky, it's okay to take that 20. It's okay to take that 10. Sure, we may miss out, but we didn't lose. And that's what we're going to use moving forward. We're going to make up this, and my gauntlet is thrown. I want 85% hit rate using this, using the fact that we know where we're going. 11 of these trades hit 20%. That's the hard part. And time is against you. Right when you open that option trade, the clock is already ticking. So it's important to be on top of it. Again, 11 of these trades hit profit. 11 out of 60 hit profit. If we added it to the 45, we're 56 out of 60. 56 out of 60 is 93%. So it's not that we're doing something wrong. The analysis is there. The numbers are there. I put all the notes. Again, how high we get, you can back test it. But at the end of the day, guys, it doesn't matter without results. That means we just have to be more careful. We have to be more decisive. And we have to let trades go even if they're just 20% profit. Just move on and just keep it going. And I think next quarter, next month, next half of the year, we're going to start seeing a lot more green and a lot less red because we're going to be smart this time because we're not going to let us get chopped. And again, we tried to buy time and it didn't work for Meta and Amazon. It just happens. We just have to roll with it. Let's go to the year to date. Now, again, I don't know if I can count all of these that we were close to, or 20% or more. Here we go. Look at March, 25%, 37%, 11 plus 2, that's 3, right? And you get 10%, we won't close that. And again, you have Apple in April. So again, another 2. So we'll throw in 13. 13 that actually hit 20% or more. 13 plus 23 is 106. 106 out of 122. That's 87%. Yeah. So 13 trades hit 20% or more. That's 106 out of 122 if we closed correctly. That's 87%. Let's go ahead and zoom this out. So again, it doesn't matter about the ego. I don't care about being right. I care about getting it right. The analysis is right. Now we just have to kind of just shift that awareness into closing in on time. Because it's easy just to throw stuff on the board, but telling people when to close is really the meat of the premium signals. Now again, I don't have the basic. Everyone, basic guys, they do their own thing. They close when they want to. For all I know, they close at 20% and they're probably killing it. Good for them. I hope so. And if not, that's fine. We're going to improve anyway. So we'll see where we get moving forward. I went ahead and just did year to date, just based on just, again, $200, $500 position, right? $500 position. That's what we've been doing. $500 risk per trade, 500. 40%. Again, you have the P&L. I added all of them up for you guys. We are up $5,244. The only issue when I trade it is that sometimes I hold, and sometimes it goes red, sometimes it goes green. Sometimes I don't get this exact number. Sometimes I get a little more. Sometimes I get a little less. So hence the spreadsheet. That's the key, the spreadsheet. 52.44% year to date is where we are in terms of signals. If we do the quarter, we are up 23%, same $500 risk. If you're doing it based on a 5% risk on a $10,000 portfolio, you're up $2,300 in terms of the quarter. Not bad. We could have done more. I mean, we gave about $1,400 away based on these three here. And again, it's little things that we can clean up. I think we could have doubled where we were. We should be at 5,000 for the quarter based on the fact that just closing on time, closing right, being smart. And we're going to go ahead and fix that moving forward. So very exciting stuff. I'm very excited for that. Real quick, let's go to futures. And futures was excellent today. Futures made me happy. NQ short, we did 50 points. NQ long, 50 points. NQ long again, we got stopped out. Stop was a little too tight. Let everyone know we're going to make that back. And we did plus 200 on NASDAQ long. We had that from yesterday. We held on strong and it paid off. ES long as well, S&P up 53 points. And we did the math here. Total NASDAQ gain, 270 points or $5,400 if you just did one NQ position for each transaction or each trade. If you just did one full NQ. If you did a micro MQ, which is micro NASDAQ futures, that's 1/10. You still made $540, even if you just did one every time. ES, it's 53 points or $2,650 in profit on one full ES position. If we do 1/10, how much did you make, class? $265. 265 plus 540 is not bad. That's about $800 in your pocket if you did one contract on micros. And if you did one contract full on each, you made about 8. Not bad at all. And again, the screenshots are here on the futures side. Futures absolutely killed it. And the beauty of futures is that there's no expiry like options. The clock is not ticking. We can just play. We played oil, we played gold. I mean, you name it, we've pretty much done it. And we're going to continue to do it. So we're going to make sure to use futures as a way for us to go ahead moving forward, kind of trade in a sense where we don't have to worry about time, that we know where we're going. We have that inverse head and shoulder set up. We're not sure on the time, whether we have holidays, where we have short-term time frames. Again, we can use futures to leverage ourselves. So again, let's say you are in masterclass or you're a premium member that also has futures annual plan. Again, you're up very nicely with futures and options. Well done. If we go to Forex are pretty much flat. We did 100 pips, we got 100 pips up to dollar yen, as high as that. We got 50 pips, and then we got stopped out on the euro dollar minus 40 from last week, and then we had up 13, got as high as 25. I've been long dollar yen for a while. We finally got it up 50, so we made up for it. But if you held dollar yen, we got as high as 122 pips. The analysis worked out if you held. So tons of stuff. I would say it was a successful first half, a successful quarter. I think the month could have been better. I think the week could have been better, and that's okay. We're just going to go ahead and move on. So there we are for the week. Hope you guys enjoyed that. Let's go ahead and get started on next week. I know. Let's go ahead and go to Forex Factory and see what is coming up for the week in terms of the new month. New half, we know the drill. Monday, July 3rd, we have manufacturing PMI. This is a survey, as we know. And then July 4th is on Tuesday. Enjoy your holiday. Wednesday, we have OPEC meetings, FOMC meeting minutes. We have non-farm payroll report on Thursday. And then we have the, non-farm payroll report on Friday. We have the ADP private payrolls on Thursday. So again, really the NFP is the big one. That's going to stand out for us. JOLTS job openings going to be something else as well. We're going to see how the labor market is doing. We had an unemployment number last week, on Thursday, and it was weaker than expected. We had the core PCE that came in weaker than expected. So again, remember the market is pricing in a 25 basis point hike for July. If they don't hike, all-time highs are definitely are going to be a discussion, and it needs to be. So that's where we are for the week. I would say focus mostly on the jobs number. And I'm glad that we didn't have anything open in terms of futures or options for Monday, because guess what? Tuesday we're closed. So if you get chopped on Monday, which is very possible, what happens? Theta burn, theta burn. This is Meta and Amazon. Again, I don't want that. That's why we held on firm, and trust me, it took everything out of us not to do it. But we held on pat, and we're going to do this right this time. We know where we make mistakes, and we have to move forward, and we got to learn from them. If not, mistakes are becoming choices, and we don't want to make a choice to make a mistake. Mistakes are mistakes, fine, but we have to learn from them. If not, they become a choice. We don't want to choose to lose, we want to choose to win. So that's where we are. So in terms of the week of economic data, not tons. We're about 2.5 weeks away from the first earnings cycle season, where we have JPM and the banks getting started. Let's go and see what's next in terms of NASDAQ. Well, NASDAQ in terms of futures, I want to see if we can retest 15,284. And if we do, our next level higher is this line, which is 15,708. Seems like a lot, right? About 400 points away. Hey, it felt like a little bit from 14.5 to where we are now. That's 1,000 points from where we were, and that was what? Just this past month. Things change quickly. And that's where we're going to have our line. That's going to be our pocket of resistance moving forward. This is where we're going to trade here on NASDAQ next week. And again, we're not worried about NASDAQ futures because it doesn't expire. There's no theta. So again, let's see if we go ahead and retest here 15,284. Maybe we can play that, or we can wait for this breakout of the inverse head and shoulders. You retest that one time. We'll see if we can go long one more time. That might be it. Remember, we want steady upstreams with pullbacks of support, holding, and then continuing higher. We don't want one big green candle. That's not sustainable. That's NQ. Let's go and take a look at S&P 500. Right there, 4,500 was so close. How many people had 4,500 SPX calls for Friday expiry? They got chopped, but maybe next week they do. So what do we look for in terms of S&P 500? What are we looking for moving forward? Let's go to the daily and see if we can make a little more context. The 23.6 fib line needs to break. That's what we want. Once we break 4,500, then we can go long. But we need a retest level. If we get to 43.84, don't think we will get there. But again, we need a meaningful pullback or a breakout. And if we break out, what next, Carlos? What's next? 45.51 we could target, and then we could go ahead and use a support as the most recent breakout level. So let's put some lines on the screen. We'll put this September 22 high where we pulled back. And again, we'll use that as our line of resistance. And that's around 45.50. If we break above 45.01, play 50 pips, play 50 handles on S&P, that's a pretty good gain. And then you got 46.24, so on and so forth. It only gets more exciting the more lines we put. How funny. Let's go ahead and expand this here. Again, I'm going to put a couple lines there. I know it's a little wacky right now, so you can see nice wedge break. I know we talked about this on the note yesterday. Let's go to the live market blog like I talked about. And I always do a kind of a market note, market thoughts. And I said, what now? Well, I still say we're setting up for more upside, especially in tech. What led today? Oh yeah, that's tech, NASDAQ. Names like NVIDIA and Tesla. NVIDIA, how much did they go up today? NVIDIA went how much? NVIDIA went up 3.63% and Tesla went up 1.66% but pulled back. Our inflection points, we talked about that. Whether it be support or technical pattern showing a break one way or another, a sharp move is coming for these names. And I say it's coming back to where we were on last week. Where did we end up from last week? NVIDIA. Did we end up to where we were last week? Pretty darn close, pretty close. We got to near Friday levels, But again, all we did was just recheck where we were on Monday. And then we go to, what was the next one? Tesla. And Tesla still has a gap to fill at 265. They do have deliveries reporting tomorrow. If you're holding calls, good luck. If you're holding puts, good luck. I don't know where this can go. More than likely, we probably will fill that gap, and probably we won't. It just depends, and I do not want to test that theory with another options trade over the weekend. So again, like I said, one more news sharp move is coming for these names. I say it's going to go back to where we were last week. Exactly not exactly pop champagne, but we can still profit by trading futures. And that's all it is this week, guys. It's a trader's market. We know at the end of June is strong into July. July is the strongest month seasonally for the S&P, and the backdrop is setting for it. GDP, unemployment claims, core PCE. We also had consumer sentiment. That beat University of Michigan. The macro is lining up, guys. So again, things may change for now, but we just have to ride this wave, and that's it. And that's really it. Let's take a look at the S&P one more time. And again, did we really get back to last week's level? No, we broke out of last week's level. So again, very good for the bulls on the S&Ps, very good for the NASDAQ as well for those bulls, because we didn't only just make up last week's numbers, last week's levels, we broke out of it. So I was a little wrong on that end, not expecting higher. The problem was that I was expecting this move yesterday, but they gave it to us today. That's what hurts options. Didn't hurt futures, but it hurts options. So we just have to be better. But moving forward again, guys, we'll get you with the watch list for Masterclass and Premium this week. But again, Monday's going to be kind of weird. You know, we got the next day off. The market's going to be closed for 4th of July. You might as well just have a 4-day weekend. I will be here working on Monday to give you all the latest information and analysis. But again, don't expect much. I expect chop. And again, the day I expect chop is the day we probably soar or tank. Who knows? But again, we will be ready for anything. Clean slate. First half, first quarter, the month, the week are over. That's it. Throw it away. We now move forward. July. One little piece of nugget of information I want to send to you guys, or I want to show you guys. Stocks like a strong first half. When the previous year is negative, a strong performance of the S&P 500 in the first half typically results in solid return in the second half. Let's take a look at that. All years above 10% year to date, end of June, which is where we are, the next 6 months, on average, gain 7.7%, 81% of the time. If you're looking at this right here in front of you. And it's on the actual blog, so if you guys are interested, thank you for the marketeer who got this information for us. 7.7% gain on average the next 6 months. So let's have a little fun. 7.7% gain. Okay, let's say we just make the average, 7.7% gain. We're going to go to percentage calculator because I'm lazy. We're going to do 7.7% on top of 40. We'll just do 4,500 since that's where we closed. That's 346 points. 4,500 plus 346 is 48.46 on ES. Does that take us to all-time highs? Why, yes, it does. All-time highs by the end of the year. Whoa, really? Yep, really. And that means more than likely next year, you're probably going to get to 5,000. So here we are, guys. On average, the next 6 months, based on statistics, based on seasonality, we're going to get to all-time highs by the end of the year. That's what it says. Stocks like the long run, compare versus bonds, bills being bonds and T-bills, gold and the US dollar slipping as always has been, always will. The stock market is nothing more than the value of the dollar because stocks are priced in dollars. Stocks like falling inflation, S&P 500, 1 month forward, average annualized percentage change when annual inflation rate accelerates and decelerates 1945 to 2021. So if we have falling inflation, I don't know if this means core, but again, we're down, 6% inflation, maybe 4% inflation. We got 5.5% more to go in terms of S&P. Or maybe 13%, 18%. On a year-to-date basis, I think we're at 5.5. We're around 5% or 6%. If we're at 6%, we're definitely going to go. So let's go ahead and take a look and see exactly where the CPI is year over year. CPI year over year reading. We'll get an actual number. Year over year, consumer price index year over year based on Y charts. This is what I got. 4%. We're at a 4% year over year on inflation. So that gets us to right here. So about 5.5% or more. Or you want to go to the next one as we keep falling, 8.5% gain in the S&P. But we just had 7.7% looking like, right? So 8.5% in the median. Let's say we're just middle of the pack of this kind of bull run. That's 10%. 4,500 plus 10%. That's 450. Now we're talking 4,950 ES. Oh, the pain trade is to the upside, guys. Remember, there's a lot of people who are pissed off that they are short. A lot of people who are pissed off that they missed the bottom. A lot of people are pissed off that stocks are going up. It's a fact. Just the reality. Let's take a look. One more thing. The NASDAQ seasonality, 1985 to 2022. There you are, based on the NASDAQ. Exactly seasonality. Up to the upside in July. Continues to go up in July. Will pull back in August. Sideways in August. Continue to grind higher in September, pull back in October, one more little micro dip at the end of October. November, we soar into December. Merry Christmas, you'll be at 4,900 based on the seasonality. So again, all-time highs. Yeah, if you want to put my name on it, that's fine. Yes, the stock market will hit all-time highs by the end of the year. Here, I'll put it on for you. The stock market, S&P 500, will be above all-time highs by end of year. Yeah. So if we want to do SPX, what is the high on SPX? Forget ES for a second. We'll do SPX. SPX, the high is 48.18. We know that 7.7% gain is the median or average of it, right? So we'll do percentage calculator if I can find it. I'll find it here. I think I switch it to the other chart. So let's go to personal percentage calculator. Yeah. So 7% gain, right? Or we're gonna do the median. We'll just do the median. How's that? 10% is a little easier. And we're at 44.50. Again, just want to go ahead and make sure that you guys know. What are we looking at? We're looking at, that's the track record. We'll go over that here in a second to give you more of my thesis. And again, the breakdown. When the stock market is above 10% year to date at the end of June, and the year previous is negative for the S&P, the median gain is 10%, 81% of the time. It's pretty good odds. 44.50, add 10%. What is that? 445 plus 450? We'll just call it what it is. 4,900. There's the S&P 500. All-time highs is 48.18. So let's go ahead and put it. Is 48.18. By the end of the year 2023. I just want to make sure everyone sees that. Okay? And the reason I'm going to do that, actually, just don't read reason. I already have the explanation here. So again, we will be above 48.18. My call is 4,900 on S&P based on the 10% seasonality. There you go. Just want to make sure everybody knows that it's there, and I'm going to pin it. You know, a lot of people like that people make a call. People want to make a statement. All right, you want a statement? Here it is. You're going to hit all-time highs by the end of the year. I mean, at this point, maybe you're not even surprised. But yeah, that's where we're going to go, and that's okay. Not really upset about it. I mean, I'm very excited as an investor. But again, we'll see what happens moving forward. But we know how things are moving for July and how it goes in terms of seasonally. Let's go a couple of more points that we need to go for. Here comes the best 2-week period for the S&P 500. 2 weeks. The first 15 days in July are the best 2-week trading period of the year since 1928. Get ready. Get ready. Everything magical happens between June and August. 15 out of 15. The NASDAQ has had 15 consecutive green years in July. Yes, that includes 2008. Wow. That includes COVID 2020. That includes 2022, last year, the inflation bomb. NASDAQ July seasonal pattern. Enough said. Add to this AI consolidating nicely in June and should be ready to take the next leg higher and narrow rally is starting to broaden. The strongest inflow month of the Ibiza season. I love this. Ibiza season is the 6 summer months. You can see the inflows coming in. Mutual funds, May to October, they love buying. And then July has a 90% track record. July is historically a good month for stocks, averaging the best return out of all the 12 months we've been saying. Over the past 10 years, stocks have been higher 9 times in July. So take that as what you will. That's where we are. I pinned that for you guys so you guys know. You can screenshot it. You want to make fun of me later, that's fine. You know, everyone has a sermon. Some people laugh, some people get inspired, some people get confused. That's how people are, and that's okay. The idea is that you get the information, and how you use it, guys, is really up to you. I'm just honored that you guys would actually listen and even weigh what I have to say. You do your own research. You should be proud of that. And again, we had a great first half of the year, great quarter. I'm very proud of the team. I'm going to enjoy my weekend. Have a great rest of your day. I'm absolutely exhausted. I've been up since 5 a.m., guys. Keeping you guys up to date as always. Again, this is what you do. If you plan, that's what you do. You got to plan. You got to research. You got to know your moves. Know what you're going to do. What's going to happen in July? July goes higher? Okay. I guess we're not going to do puts then. Probably not. I'm going to do calls. Every pullback is an opportunity. And we'll see what we get moving forward. Thank you so much again, guys. I'm honored to be the one to give you this information every day and for you guys to be part of the audience. I do this for y'all. Appreciate you guys as always. Thank you for the support. GAR Capital, www.gar.capital. You can also hit us up on Instagram at GAR Capital, or you can hit me up on my Instagram as well at CEO GAR Capital. Enjoy your weekend, guys. Happy 4th. I'll see you on Monday. So I'll say happy 4th one more time. It is race week. It's going to be a great F1 race. I have a couple of races on the docket. Can't wait. Have a great rest of your weekend, guys. We'll see you guys soon. Cheers.